What is a gift of equity? A gift of equity is a term that's used when a homeowner sells their property to somebody in the family for less than market value of the home. So let's dig a little deeper into that. Equity is a difference between the market value and the sales price. The equity is simply the difference in between those two numbers. This is commonly referred to as the gift for tax purposes. So for example, if your home is worth $200,000 and you sell it to your son for $180,000, then the $20,000 difference is considered to be the gift of equity. Now the benefit to the buyer is they can use that $20,000 difference as a down payment on their loan. Now the lender will likely take that amount of the gift into consideration when determining the size of the loan and in what terms that they're willing to extend. This type of transaction is usually beneficial to both parties, a buyer and the seller, because it allows the seller to help out a family member while still getting some of the money out of the sale. And for the buyer, they get to purchase the house at a discounted price while also qualifying for a larger mortgage loan than they would have if they had bought the house at fair market value.